The issue was they wanted to increase their income, reduce the hassle of management and maintenance, and avoid the tax hit they'd take if they sold.
So they're sitting on this highly appreciated asset, but there's a catch?
Exactly. The building had been fully depreciated, which meant if they sold, they'd face capital gains and depreciation recapture taxes, roughly $1.5 million in total. That's a huge hit.
And remember, these folks were planning ahead. College education is a big expense, and they also want to buy a vacation home, but without shrinking their wealth or giving away a third of their sale proceeds to Uncle Sam.
Makes total sense. So, what was the solution?
We introduced them to the idea of a customized, intermediated installment sale. It's not for everyone, but for the right client, it's a game changer.
Break that down for our listeners. What is it and how does it work?
In simple terms, it's a way to sell your property but defer capital gains taxes by structuring the transaction as a long-term installment sale. The proceeds are held by a third-party intermediary trust, and the seller receives scheduled payments over time rather than a lump sum. So in Steve and Kathy's case, they sold their property for $5 million. After paying off the debt and transaction costs and fees, they stood to receive around $4.25 million. With the intermediated installment sale in place, instead of getting hit with immediate taxes, they received $250,000 per year for 5 years, tax deferred. It was only after 5 years that they scheduled to get their taxes paid little by little.
That $250,000 per year that they received tax deferred gave them breathing room and flexibility.
They used some of that money to send their 2 children to college, debt-free. They also bought a vacation home in Costa Rica